April 26, Friday is the highest crypto and blockchain industry. I'm Zu. Welcome to the headline sponsored by Deepcoin. Recently, Bitcoin dropped from 70,000 to around 64,000, with the total market cap dropping slightly to 1.27 trillion. For Bitcoin's pullback from the highly speculated meme coins, this is undoubtedly the heaviest blow. This can be most directly reflected in Bitcoin's market cap and market dominance. Currently, Bitcoin's market cap is slipping, but its market dominance has risen instead of fallen from 52% to 53.41%, with the highest exceeding 54%. Generally speaking, when Bitcoin's market dominance exceeds 51%, it means that Bitcoin leads the market trend and dominates, with funds focusing on Bitcoin. Once Bitcoin rises, it will continue to suck blood from alternative coins. Only after breaking through or reaching a critical level will alternative coins rebound. However, when Bitcoin falls, alternative coins will follow suit and fall harder than Bitcoin. When the market dominance returns to around 51%, the market forces will gradually become balanced. In the first 2 days of this week, Bitcoin spot ETFs saw net inflows of funds and Bitcoin rebounded slightly. However, from Wednesday onwards, funds started to flow out. Over the past 2 days, there has been a net outflow of over 130 million from Bitcoin spot ETFs, mainly due to the selling pressure from Grayscale's GBTC. Moreover, yesterday, with the exception of BlackRock's IBIT and EZBC, almost all other Bitcoin spot ETFs experienced net outflows of funds. On the surface, it seems like US institutional investors are retreating en masse, or is it due to the short-term impact of local conflicts causing a risk-averse sentiment? In any case, with less market funds, the panic selling sentiment in the future will be far greater than the chase after the rise sentiment. Investors participating in the market need to be vigilant. The rainbow chart is a long-term valuation tool for Bitcoin. It uses a logarithmic growth curve to predict the potential future price direction of Bitcoin. Historically, the rainbow chart has accurately predicted the high range of the market. Taking into account factors such as inflation and market size, currently with Bitcoin at over 60,000 per coin, it's still in the undervalued buying and dollar cost averaging range. Based on past expectations after Bitcoin halvings, this time, the market's high valuation after the Bitcoin halving may still have a 3 to 3.5-fold upside potential. Assuming Bitcoin is 60,000, the next high for the market will be between 180,000 and 210,000 per Bitcoin. Investors with enough patience for cyclical investments can consider building a position in batches at low levels or start dollar cost averaging now, which is a decent choice. In September 2020, the European Commission submitted a proposal for the markets in crypto assets MiCA regulation. In April last year, the finance ministers of the 27 member states voted to approve the MiCA regulation, which is expected to come into full effect by the end of this year. This also means that EU countries now have the world's first comprehensive set of rules for regulating crypto assets. Since then, the EU has been enacting one regulation after another in crypto regulation, becoming a joke in the crypto circle, with people saying that EU politicians have signed so many crypto laws that their hands are sore. Just last month, after establishing new rules for crypto companies, they are now starting to crack down on crypto money laundering crimes.
The European Parliament recently voted to pass a series of new regulations requiring cryptocurrency companies to conduct due diligence to combat money laundering activities. These regulations will partially strengthen due diligence measures and customer identity checks, including so-called cryptocurrency asset service providers. They must also report suspicious activities to authorities. The new regulations will affect cryptocurrency asset service providers CASP, such as centralized cryptocurrency exchanges, and many other institutions, including gambling services. In response, Patrick Hansen, the EU Strategy and Policy Director of Stablecoin Issuer Circle, posted that this set of legislation will continue to be formally adopted by the EU Council and will take effect 3 years later.
Although this law is set to take effect in 3 years, there are suggestions that it may come into effect earlier. Currently, global crypto regulation is as volatile as a drifting duckweed. With US crypto regulation wavering between the SEC and the CFTC, regulations in Singapore, India, Japan, and South Korea are still being explored. Although Hong Kong's friendly policies keep coming, its independence is being questioned. Against this backdrop, the EU's move has undoubtedly set a typical example for global virtual asset regulation, with great milestone significance. Although the EU has taken the lead in crypto regulation, compliance regulation is the way for crypto institutions to survive in the future. But is the EU's constant introduction of new rules for the market really good for the development of the crypto market? For some time, the US SEC has been intensively cracking down on leading crypto institutions, including top crypto exchanges like Coinbase. Many crypto institutions have protested vehemently, even accusing the SEC of driving the Web3 revolution out of the United States. But this has done nothing to change the SEC stance. In the crypto industry, every token issuer is like a dancer walking in a blade's edge, where a slight misstep could plunge them into the SEC regulatory vortex. Today, the leading global Web3 venture capital firm A16z brings us 5 survival rules to help you avoid the SEC's line of fire when issuing tokens and ensure your project lands safely.
A16z firstly advises against publicly selling tokens for fundraising in the United States, as you may find yourself in a quagmire of U.S. securities laws. A16z emphasizes that decentralization is the core direction of token issuance. Only by truly achieving decentralization can token issuance risks be reduced, making projects more robust. Communication is crucial during token issuance, but A16z reminds us to watch our words to avoid giving the SEC opportunities to intervene. While listing tokens on secondary markets can provide greater liquidity, it may also bring greater price volatility uncertainty. It is advisable to avoid listing on exchanges or engaging in market-making activities within the United States. Lastly, A16z reminds us to pay attention to token lockup periods and ensure that tokens are locked up for at least 1 year.
Read and implement these rules carefully, and even if the SEC wants to cause you trouble, they won't be able to get a hold of your pigtails. In summary, A16z's 5 survival rules provide us with valuable guidance on the path of token issuance. As long as we follow these rules, we can avoid SEC's line of fire and navigate our projects safely in the crypto world. Although crypto pioneers are still struggling with the regulations, who says the power of speech is still in their hands? When it's time to bow our heads, we bow. On April 20th, the Rune protocol, which went live at the same time as the Bitcoin's halving, triggered a market frenzy. In just a few days, Rune transactions skyrocketed like rockets, and fees also soared. Especially on the 23rd, the Rune market welcomed a record high of over 750,000 transactions, making the entire Bitcoin network sizzle.
Data shows that Runes have only about 77,000 transactions remaining from the 25th until now. Currently, Bitcoin network fees have significantly calmed down, with fees dropping to between 30 sat and 34 sat per byte, compared to levels between $127.59 and nearly $200 per byte during the Bitcoin halving on the 20th. Today, the most market-focused rune is the third rune dog airdropped by Runestone founder, with a trading volume exceeding $100 million within less than 24 hours, making it the rune with the largest trading volume.
On April 20th, the Rune protocol, which went live at the same time as Bitcoin's halving, triggered a market frenzy. In just a few days, Rune transactions skyrocketed like rockets, and fees also soared. Especially on the 23rd, the Rune market welcomed a record high of over 750,000 transactions, making the entire Bitcoin network sizzle. Bitcoin transaction fees surged, with the increase even exceeding the impact of the Bitcoin reward halving to 3.125 BTC. The total block reward once reached 40.71 BTC, exceeding 2.6 million. However, the good times didn't last long. In the past 2 days, the market seems to have returned to calmness, with the Rune transaction plunging by 99% and the fees also dropping back to civilian prices. Could this Rune craze really be retreating? The crypto circle has been stirred up by another bloody battle. This time, the mother company Consensus of the Little Fox wallet MetaMask has gotten into big trouble. Has received a wells notice from the US SEC, being warned that MetaMask is an unlicensed broker. This really riled up Consensus, which immediately filed a lawsuit against the SEC. launching an epic counterattack. You see, Consensus is no small player in the crypto circle. It's a big shot. And MetaMask is a favorite of crypto enthusiasts, but this time, the SEC has pinned the label of unlicensed broker on it, clearly trying to pick a fight. Consensus, of course, is not taking it lying down and has opened fire on the SEC directly.
Consensus is pulling no punches in its lawsuit, accusing the SEC of attempting an illegal power grab by categorizing Ethereum ETH as a security. This move has put the SEC on the hot seat, stirring up the entire cryptocurrency community. Consensus even specifically cites the opinion of the SEC's sister regulatory agency, the CFTC, stating that the CFTC classifies ETH as a commodity, so why does the SEC claim it's a security? This has put the SEC in an awkward position.
This lawsuit battle is raging hard. Not only does Consensus demand that the court declare ETH is not a security, but it also hopes the court will rule that MetaMask is not a broker and that providing staking services does not violate securities laws. This is really pushing the SEC into a corner. However, let's be honest, the SEC is no pushover either, although it's still unknown whether it will actually file a lawsuit to follow up on this Wells notice. This battle is getting more and more interesting. But does receiving a Wells notice from the SEC necessarily mean you will be sued? Well, usually receiving a Wells notice from the SEC does not necessarily mean a lawsuit will be formally filed. Based on past experience, the SEC's chances of suing are not low, especially in the cryptocurrency field, where companies often end up in civil litigation and many ultimately choose to settle by paying fines.
The Bitcoin L2 project BEVM announced investment from Bitmain on the X platform to explore more possibilities within the Bitcoin L2 and Bitcoin ecosystem. Data shows that the current supply of USDC on the base network is second only to Ethereum, reaching a total asset volume of $2.46 billion, approximately 1/10 of the USDC supply on the Ethereum network. Court documents reveal that Musk has requested former OpenAI board member Helen Toner to submit documents and communication records related to the decision to dismiss Sam Altman and reinstate him as CEO. The NFT trading platform Magic Eden has expanded to the base network, allowing users to collect diamond rewards and enjoy a limited time 0.5% fee on this new base NFT market. Creditors of Celsius loans are actively considering appealing against Celsius's restructuring plan as they see the recovery rate of the collapsed lender's assets lower than expected. Creditor groups are in discussions with several lawyers regarding appealing based on two key claims.
Okay, that's the main content of today's program. If you find our channel valuable, please feel free to share and follow us. You can also become a member by clicking the top right corner to see our membership benefits. Our channel focuses on curating valuable news related to the crypto, blockchain, and mining industry. From Monday to Friday, we provide news and information. Saturday and Sunday, we offer in-depth special reports. You can access our Wells codes from Monday to Friday, as well as articles from our special authors in the industry.